Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Capital Federal Financial Inc. quarterly report. Capital Federal Financial Inc. offers a wide range of financial products and services to its customers. At the core of their offerings are deposit products such as savings accounts, money market accounts, checking accounts, certificates of deposit, and retirement accounts. These deposits provide individuals with safe and secure ways to save and manage their finances. In addition to deposit products, Capital Federal Financial also provides various loan options for both personal and commercial use. Residential real estate loans, commercial real estate loans, construction loans, and consumer loans are just a few examples of the types of loans offered by the company. These loans cater to different needs and purposes, from purchasing homes or businesses to financing large projects. The company also offers convenient banking services through mobile, telephone, and online platforms. Customers can access their accounts, pay bills, and manage their finances remotely using these digital channels. Furthermore, Capital Federal Financial operates a call center to provide customers with personalized support and assistance. In terms of investment, the company invests in various securities and mortgage-backed securities, diversifying its portfolio and generating revenue through interest income. Overall, Capital Federal Financial's comprehensive range of products and services makes it a one-stop shop for individuals and businesses seeking financial solutions. The stock price of Capital Federal Financial, Inc. has seen a significant increase of over 34% in the past year, with a 52-week high of $7.74 and a low of $4.90. Several key news events have contributed to this surge. One major factor was the strong fiscal year 2025 second quarter results announced on April 22, 2025. The company reported a net income of $15.4 million and basic and diluted earnings per share of $0.12, with a notable increase in its net interest margin due to higher yields on loans and a strategic shift towards commercial loan portfolios. Additionally, the declaration of a special dividend of $0.04 per share on December 17, 2025, signaled financial health and positively impacted investor sentiment. The company's better-than-expected fiscal year 2026 first quarter earnings, announced on January 27/28, 2026, also played a significant role in the stock price increase. With an EPS of $0.16, surpassing analyst estimates by $0.02, analysts at Keefe, Bruyette & Woods raised their price target from $6.50 to $7.50. The approval of the 2026 Omnibus Incentive Plan on February 2, 2026, further boosted investor confidence in the company's future prospects. This plan outlines the framework for motivating and retaining key personnel, which can be viewed positively by investors. Overall, these news events have contributed to Capital Federal Financial, Inc.'s stock price increase in the past year. The primary drivers of revenue growth or decline in an organization can be attributed to several key factors. On the positive side, commercial loan growth has been projected to increase by 18% for the current fiscal year, resulting in significant revenue growth in commercial lending. Additionally, a substantial increase in deposits of $167.2 million to $6.76 billion at December 31, 2025, has contributed to revenue growth. Furthermore, net interest income has seen an increase to $1,345 million in DEC 2025, up from $1,294 million in DEC 2024. This indicates a positive trend in the organization's financial performance. On the other hand, the primary drivers of revenue decline are decreases in insurance commissions and other non-interest income. The decrease in insurance commissions by $229,000, minus 22.5%, due to industry changes, has had a significant impact on revenue. Additionally, total non-interest income has seen a total decrease of $312,000, minus 5.4%. These factors have contributed to the overall decline in revenue. Net income experienced a significant increase from $15,431,000 in 2024 to $20,304,000 in 2025. This growth can be attributed to the expansion of the bank's higher-yielding commercial loan portfolio, resulting in higher net interest income. However, despite this increase in net income, profit margins actually decreased slightly. The net income margin dropped from 81.3% in 2024 to 80.2% in 2025. This decrease may be due to various factors, such as increased operating expenses or changes in the bank's overall business strategy. On a more positive note, the bank's profit margins showed improvement in certain areas. The net interest margin increased by 33 basis points, from 1.86% in Q4 2024 to 2.19% in Q4 2025. Additionally, the return on average assets, ROAA, rose from 5.98% in 2024 to 7.72% in 2025, indicating a more efficient use of assets. Furthermore, the bank's operating efficiency improved as evidenced by the decrease in operating expense ratio from 0.65% in 2024 to 0.83% in 2025. This reduction suggests that the bank was able to manage its costs effectively and allocate resources more efficiently. Overall, while net income margins decreased slightly, the bank's profit margins showed improvement in key areas, indicating a positive trend for the institution. The company's financial performance reveals a concerning trend regarding its operating cash flow. According to the provided data, the company has been experiencing negative operating cash flow for at least 2 consecutive years. In 2025 and 2024, the company reported losses of -$19,809 and -$46,983 respectively. This indicates that the company is struggling to generate sufficient cash from its operations to cover its expenses, which can be a significant concern for investors and stakeholders. The company's debt level has undergone significant fluctuations over the past year. While there are instances of a 7.4% increase in total debt, loans, and borrowings, on page 2, other pages show a decrease in debt levels. For example, page 42 reports a 24.8% decrease in total debt borrowings, while page 58 shows a 16.4% decrease in debt level from $2,180,656 to $1,829,816. In terms of interest expenses, the company has experienced decreases across various periods. On page 63, total interest expense decreased by $822 from December 31, 2024, while on page 71, it decreased by $720,000, minus 1.3%. Additionally, page 76 reports a significant decrease in interest expenses due to changes in total interest-earning assets and total interest-bearing liabilities. However, the overall trend is not consistent across all pages, indicating that the company's debt level and interest expenses have changed significantly in some instances, but not consistently. Management is optimistic about the company's outlook and strategy. The transition from a retail-oriented financial institution to a full-service commercial bank is underway, with investments in technology, people, products, and services aimed at growing all aspects of commercial banking. A key driver of this growth is commercial loan expansion, with an expected 18% increase in overall commercial loans for the current fiscal year. To achieve this goal, management is focused on deepening relationships with customers through strategic actions, such as investing in technology, people, products, and services. The company's commercial lending will continue to grow as a percentage of its overall loan portfolio, with a strong emphasis on maintaining credit quality through disciplined underwriting and ongoing monitoring. Additionally, the bank aims to maintain a well-capitalized status by balancing investments in the future with returns to shareholders through dividends and share repurchases. Overall, management is committed to managing cash reserves effectively to meet short-term liquidity needs, while also having access to lines of credit and term wholesale borrowing sources as needed. This balanced approach will enable the company to achieve its growth objectives while maintaining a stable financial position. The company has a history of rewarding its shareholders through various means. One such way is by paying dividends, which it has done consistently. In fact, the company paid out a total of $44.3 million in fiscal year 2025 as dividends to its shareholders. Furthermore, it also offers regular quarterly cash dividends, with each share receiving $0.85. In addition to paying dividends, the company has also been actively involved in buying back shares from the market. In one notable instance, it repurchased a total of 2,376,633 shares for $16.3 million. This move not only boosts shareholder value, but also demonstrates the company's commitment to its investors. That concludes the financial summary for Capital Federal Financial Inc. Feel free to comment below and I will be happy to answer them when possible.